Good morning, traders, and a happy Thursday out there to everyone, and the first day of the trading month. We'll have that to consider here today, but hope you all had a good evening there for starters, and we certainly had some nice activity there yesterday towards the tail end of the day. But as we come into the session this morning, a couple items to be aware of. We do have OPEC meetings going on today, so as far as following the energy and the crude, we'll want to be aware of that. Outside of the OPEC meetings, we have our unemployment claims for the U.S. out at 8:30 Eastern, and then we have our manufacturing PMI at 9:45 and 10 o'clock Eastern, respectively. So a few items in the queue to be aware of there today. But with that said, we want to come over here and start to look at our daily charts here. On the S&Ps, we know that yesterday we were able to put in a nice range expansion bar, giving range expansion through the daily 5 SMA after having been on an extended run to the upside. The only thing that we have to consider here is the nature of the range expansion bar, taking out this previous impulse bar that we had to the upside on the 29th, meaning that we've taken out the bottom of it, so shifting some of that upside momentum that we had. But what we can see has unfolded overnight is that we've been consolidating some of the high to low activity that we had from yesterday. And we'll see here in the overnight session, we have left a bit of a tail, so we tested inside the previous day's range, but unable so far to test back above the 5 SMA on these daily charts, which come in at 49.10 and change there. Outside of that, since we did have a fairly sizable bar there yesterday, only in those cases, I like to just monitor or note where the middle portion of that comes in, the 50% point of our range expansion bar, which in yesterday's case we have a 49.02 as the middle of yesterday's bar. So even in the overnight session, we traded up. Globex high of 48.95.75. So just a little bit shy on really recouping 50% of the damage that we had done there yesterday. So outside of that, of course, as far as good levels go, we'd still have to be monitoring or having on the sheets the previous day's low of 48.66, because we know yesterday we also came fairly close to testing towards that daily EMA here on the daily displays. So for now, an inside range bar from the overnight session, a little bit beneath the 50% point in the middle of yesterday's bar, and for now, we're keeping it above the previous day's low of 48.66. Coming in now on the intraday displays, though, such as the hourly charts, we know that yesterday we were also starting to test into some of that lower developed area, and we did an okay job of maintaining ourselves. We tested into it, but short-lived. Then we started to make our way out of it, and then this was what we had starting to unfold overnight. As we had a reaction up off the low, we put in one higher low, not super well defined, and we're working our way back. Remember, yesterday we had the 49.01, which was a key zone because we have that as the bottom of this previous congestion zone or coil that we had been making. So even though we've had progress overnight, not quite enough to get back inside of our previous coil. So that pretty much coincides with that 50% mark there from yesterday. So as opposed to that, what we're coming in with here is reversion back towards this hourly moving average after having good selling pressure. So like we said overnight there, if we have any counter reactive lift, what we'd want to be on guard for is just monitoring in case we're going to be forming a continuation pattern. So coming in, we respected the hourly moving average and are rolling over just a bit. So 48.74 and a quarter. Of course, going to be a little more of an intermediate level because that's going to coincide with that Globex low that we had put in there. So it's actually just a notch beneath that. Get it set exactly there for us so we have it on the sheet. So 72.50 there is going to be that overnight low to keep in mind there for our S&Ps, but plenty of good zones to keep in mind there. But I think the main premise for now is the fact that we weren't really able to recoup more than 50% of that previous day's range yet. So that's where we are as far as the S&Ps go. The DAX, for comparison, fairly similar because it had that feeling of the extended run to the upside as well. similar high to low range expansion bar down yesterday, but the magnitude of it not quite as dramatic in the case of the DAX. So over here, we could see, first close below the 5 SMA is going to be flagged as that 5 SMA buy. And what we'll want to watch here is we have 17018 here as the 5 SMA on the daily charts, simply because the DAX was on that similar extended run to like what we had there in the ES. But just not quite as dramatic of a high to low bar there yesterday. Also holding just briefly above the daily EMA, but they were able to get that test out of the way overnight. So DAX holding all right there for itself, but at 17018 might prove to be a bit of an initial hurdle there for that DAX. So we'll keep tabs on that there just as far as the early morning session goes, seeing as to how it starts to handle itself. Over here on the Euro currency display, still working with quite a number of tails on the daily charts as of late. We know we had put in our balancing act coming into the session yesterday. We did have a mild high to low day. We didn't necessarily close on the lows though, so overnight we came down, did some working on, trading beneath the previous day's low. But to keep in mind on the daily displays here, we're back inside the small congestion zone or inside pocket here on the daily chart. So as we start to leave tails here, we are approaching, the inside zone, even the lower end of this previous congestion that we had from the earlier portions of December. So EC has been leaving tails, but what's very interesting is here on the hourly displays, if I squish this down just a notch, something that's unfolding already, overnight, so nothing that's going to serve us here immediately, but we can see we've had this nice feeling of the buy divergence here on the hourly charts of the Euro currency, right? The nice feeling on the 310, that kind of W shape, the lower low in the price and higher low in the oscillator. But like we said, this started to form and ripen up overnight, so on the counter reactive lift, we've already reverted back to the hourly moving average and any further up from there, viewing this 1.08455 as an additional point of interest, because above that we start to test into some of that heavier selling pressure that we had to the downside there. So just an intermediate zone to be aware of in the Euro currency, but already working off the buy divergence, not a fresh technical pattern. This is something that's been unfolding from the overnight session, but still worth monitoring. I like the hourly display there as far as the Euro currency goes to monitor along the way. So that's where we're leaving that one off there. Then we have our lovely gold, which is in a bit of a different stance here, simply because the gold has been working with a higher degree of bar overlap. We know on these larger time frames here, such as the 120-minute display, we were able to trade into some of our lower developed zones in the gold. And for now, coming into the session, we'll want to watch, see how we're able to trade around this previous day's low of 2048.8. We were able to put in one lower high, so we fell short on taking out that previous day's high, and we have ourselves a pretty well-defined range that we can work with here. But for now, the previous day's low is going to be a bit more of an intermediate zone that we could certainly keep tabs on there in the gold. If we get some better acceptance beneath it, we have all these little channeling activity that we had from these slightly higher cycle lows. So first time, as of the past, 3 to 4 days, where we've been able to make a slightly lower low on the 120-minute display. So along the lines of an A, B, C type of reaction, you could see that in the oscillator. So about hourly ABC down for the time being there in that of the gold. And then we have the crude. The crude also a nice mover because the crude also had been on the extended run to the upside, like our S&Ps and like that DAX future. So here in the crude, we did have our close below for the first time here in the crude after having been above the 5 SMA for the past 8 to 9 trading days. So good range expansion bar down. Overnight, we still traded lower first, so we left the tail beneath the previous day's low, and we're starting to work our way back up. For one, 76.31, visible previous cycle or reaction high has been serving as a good point of interest. So we're back above that for now, but how I'm viewing this here in the crude is that yes, we have the 76.31, but we also have this 77.11, which would be that 5 SMA on the daily chart in case we want to try and retest back above that at all, since we had our first close beneath that yesterday. We did have some good selling pressure, so we shifted some of that upside momentum back to the downside, but overall we're doing a fairly good job of maintaining ourselves as far as the crude display goes. So if we take this same 120-minute display and drop it down just a notch to be like an hourly chart, we'll see a little better the nature in which we came down. Looked below the previous day's low. Short-lived though. We left the tail, so didn't spend much time down there. And now we're working on some counter-reactive lift in a two-par wave, so also a bit of an ABC up type of rhythm on the hourly charts in the crude. But between, if we're able to hold ourselves above 76.31, I'd view that as mildly constructive on the crude. So between that 76.31 and then this 77.10, 77.11, in case we want to work our way back above that 5 SMA, that's going to be a nice zone to latch onto as well there for that of the crude. And then lastly here, before we go hopping into our morning data point, is that of the bonds here, the 30 years, which have been also, as we know, making good progress. We have to really blow these ones up because this ABC on the daily charts is starting to get some progress, but we still have 125.15 as that previous reaction high. So our pullback, reaction back up, and then our next swing down formed our balance, and we've been working with 3 strong days of low to high. The bonds have really been trying to give it all they got here, so any further up here in the 30 years, we'd be running into this 123.15 in the bonds, and then outside of that, in case we have some adverse reaction, since we do have some morning data points, would be that 5 SMA here on the daily chart in case we react to the downside. 121.21 is where that 5 SMA for those bonds come into sight. But with that said, we got our unemployment claims figure coming out here in just a few moments, so we will want to let that settle in and then see what we have lining up for this lovely session in front of us. We'll leave this hourly S&P up in the meantime and see how these markets want to respond to these morning figures that will be due out here shortly.